Mortgage Lady. I wanted to share a little information concerning living benefit life insurance. A lot of people, when they go to get a mortgage, when they either buy a home or refinance, they will get just so much direct mail, emails, phone calls about mortgage insurance. So I wanted to kind of go over kind of how that works, what your options are, and what's the best way or best kind to actually get. So let's go ahead and jump into that. So, really there's really three distinct items that people look at in today's financial environment. What happens if I die too soon? So, if you get a mortgage, and usually the agent or company will say, hey, if something happened to you, could you still make that mortgage payment? Or is your household income based on two incomes? And typically it's on two incomes. So that's kind of why you would get it in case you would die. But what I want to talk to you about is what if you don't die? What if you become ill? Okay, so let's go ahead and dive into that. So we just talked about eliminating the gap. And what does that really mean and what does that entail? So anytime that you're looking at putting together any kind of financial plan, which can include your mortgage, there's basically three areas that we look at. One, we look at your emergency fund. Okay, especially in today's environment with COVID-19, is you really need to have a reserve of cash just in case, hey, if you become unemployed, if your hours have been reduced, or just, you maybe have family members, whatever the case may be, things unexpectedly come up, right? We also have our retirement. We're not really going to talk about that today, but, those are our IRAs, 401k, 403b, and tax-free retirement accounts. The third area is our protection. So when you went and got your house, guess what? You made sure that you had homeowners insurance, right? You probably also have car insurance. Before you owned a home, you probably had renter's insurance. Heck, if you're like most people, you probably even have insurance on your cell phone, right? Because those things aren't cheap. So what we're going to talk about is life insurance. Now, typically when I'm talking about life insurance with people, kind of the blood drains from their face. They don't want to hear about it, talk about it, nothing. Because usually when I say the word life insurance, what's the first thing that comes to your mind? If you're like most people, it's death, and death is kind of morbid, right? So there's an old kind, I'll just call that the black and white television of the insurance policies. And it's like this: you buy, you die, they pay. Kind of morbid, but when you think about it, you have it for two reasons. One, because you love somebody like a spouse or a child, or two, because you owe somebody like your mortgage, right? Which is why it's marketed as mortgage protection. But what if you don't die? Let me give you a couple examples what I mean by that, and then we'll go into why is that important and how does it work. Did you know that every 38 seconds in America today, someone has a coronary event like a heart attack? Also, 75% of the people don't die. So let's say that actually happened, right? You don't die. See, if you have one of those black and white policies, guess what? It's not going to pay. It's only going to pay out if you die. With our policies, it pays out in death and in life. Second thing we talk about is strokes. Did you know that every 40 seconds in America, someone has a stroke? 70% of the people, they do not die. So again, if you have one of these old policies that only pay in death, that's only 30% of the people that's being paid out. What happens to the other 70? Now, the third thing we'll talk about is cancer. Now, we know that cancer can kill, right? We probably have friends, family, coworkers, whatever the case may be. But did you know that 87% of breast cancer victims survive, and 98% of prostate cancer victims survive? So why do I tell you that? I'm not a health professional, I'm not in that industry, but typically two things happens when any of these situations happen. One, our income goes down, okay? Typically, even if you have short-term, long-term disability, That's about 60 cents on the dollar. So you're still taking a 40% pay cut. And even if you don't lose your job, you don't lose time off of work, if you're still getting paid just like you were be showing up, well, guess what? Typically our expenses go up for out of pocket. It might be deductible on the insurance, might be out of pocket expenses, might be more travel, whatever the case may be. So what do people typically do to fill this gap between what they were making and their expenses and what they're making and their expenses? Because it's kind of a double-edged sword. You lose income and you have more expenses, so that gap is even bigger. So people will go out and borrow money, right? They'll borrow money to put into this gap. Maybe you'll refinance the house, okay? Sometimes that makes sense. Just depends on the environment. You ever heard somebody borrowing from their IRA or their 401k or their 403b, right? Or even this emergency fund. Just so you know, according to nerdwallet.com, the average person only has $400 in their emergency funds today. But what if there was a way where you didn't have to refinance the house, you didn't have to go get into credit, you didn't have to borrow from your retirement, you didn't have to withdraw your emergency fund, that all these things that we're working for was protected because our life insurance with living benefits would pay you cash to you, typically, and consult your tax professional, typically tax-free. Would that be a pretty good solution to the problem? That's what we think, and that's exactly what we have to offer. So think about this. When you get the news that you have a serious illness, the last thing you want to worry about is your financial security. Think about this for a second. What if you had a family member that was in the hospital because they had a heart attack, stroke, cancer, whatever the ailment? People will heal faster when they don't have stress. Do you think that financial burden of not working and how's everything going to get paid, it's going to creep into their mind? Absolutely. And what we want to do is make sure that we're getting as healthy as possible, as fast as possible, so we can get back to whatever our normal is, right? So 48, 48, 60, what do these numbers mean? 48% of mortgage foreclosures are the result of a financial hardship due to a critical illness. Only 3% is due to death. So when you're buying these mortgage protection plans and it's a death only, understand that almost half of all mortgages or mortgage foreclosures, only 3% is due to death. It's because of critical illness like the heart attacks, the strokes, the cancers. Any business owners, maybe you're married to one, maybe you have a family member, but 48% of businesses that fail, they fail because of a critical illness like the heart attacks, strokes, cancers. And look at this stat, 60% of all bankruptcies are directly tied to a medical condition, such as a critical illness, and 80% of the people already had health insurance. So it's not a health insurance issue. Look at these numbers and ask yourself, if I was getting a policy, would I want one that would only cover if I died, or would I rather have one that covered me in life and in death? So let me give you an actual example of a client of ours. 36-year-old male and a 34-year-old female. We were doing some financial planning with them, and they already had a $500,000 policy, but they had that old black and white type of policy. It only paid in death. We showed them how to get into a living benefit, so if something did happen, they were protected. 4 months after we delivered the policy, the wife is diagnosed with stage 4 breast cancer. Now I will tell you, good news, she's doing great, okay? She was able to get a check for $412,000. Now here's what I want to ask you. Do you think she was worried about how the mortgage was getting paid, how the house was, or how the mortgage was getting paid, how the car was getting paid, the credit cards, food on the table? No, she had peace of mind. And I believe that's one of the reasons why she was able to heal so quickly. That is what we do, and that's why we wanted to share this information for you. So what's your next step? Contact me directly. My direct cell number is 817-863-4231. You can email me at rclaypool@valueteachers.com, or you can schedule a one-to-one consultation for your communities. I have an online calendar, which is www.meetme.so and / my last name is Rich Claypool. We're here to be a resource to educate you on what your options are, especially during this unprecedented time in America today.